Hello, YouTube viewers. This is Mike with Financial Market Geometry on Saturday, May 22nd, 2021. Last week, I used customized AI-generated voice on my public video. So people told me the voice too dramatic and funky to adapt. I guess that is just a nice way to say they didn't like it. So this is what you hear, my real voice. I hope most of you like it better. With that said, let's get started and go to the meaty part. What you're seeing is SPX 5 SPX 15-minute chart. In my last public video, I said if market gap up and go like last Friday here, then all my predictions were invalid. Mr. Market granted my luck and gap down indeed and formed a congestion around 4150 and 4170. That is slightly lower than the congestion area I predicted, 4160 to 4180. I predicted there will be a second 1F leg up, but this 1F leg up only made lower high because the congestion area is slightly lower than I anticipated. Last week, I also said after, regardless, this one, one it is a one or two 1F leg up, the market will revisit May 12th low. That revisiting happens on May 19th. On Monday, May 15th, after our update, on my subscriber only board, I said May 21st was a time pivot. We had May 21st high. Now let's go to my trade and see how my trade were in this week. This week I didn't trade SP500 too much. On Monday, I longed at 10:30 bar here. That is quickly stopped out with a several handle loss. And from that, when on Monday opens, I gap down, I say 50% that we're already on 1F down. And long gas stopped out, I confirmed that confirms it is on 1F down for sure. Okay. And Tuesday was another single trade day for me as well. I waited because all this congestion is not non-tradable for me. I waited on to the last 15 minutes and scalped and recovered all my Monday loss and made extra. I didn't hold the short overnight because I wanted to trade Bitcoin futures after hour. The trade turned out to be a great trade. I might talk a little bit more at the end of this public video if I don't feel tired. Back to SP500 trades. Wednesday was a stomach irritating day. I almost caught the very bottom of that day. I longed at 10:45 right here. But holding that long become quite uncomfortable since the market have several quick and wide range up and down. Fortunately, I was sort of used to this uncomfortableness and able to hold along to the end of that day. Trading is never supposed to be comfortable. Gapping up on Thursday triggers a long, and I held the longs until here. It's 4162, and you hear. And then shorted this 5 minutes climax run. And right here, 12:30, I switched from short to long. but got quickly stopped out with a few tick slots. Rest of day, I tried to short the 1F first sale. I was able to hold a bearish option spread after two trials. Friday's gap was an exhausting gap. I added my shorts at 12, and the second bar at 10, and covered covered my added short at 12, or at gap close here at 12 o'clock. And then the bearish spread, well, I activated my bearish spread at the close of Friday with slightly more than 100% return. Some of you ask me, what instrument I use under different market conditions. I like to use 30 bearish option spread as an example to answer the question partially. First, options are not my primary trading instruments. I use them whenever I want to take high risk opportunities. Since the opportunity are high risk, I'm aware of that. I may lose 100% of that position. I'm perfectly fine with it loss if really that happens, such as the bullish option spread I mentioned in my last public video. Since I have had fully accepted the risk, I was able to hold my 30 option spread at the first 30 minutes on Friday. Should I hold liability ETF shorts, I may have already exited at Thursday close or stepped out at Friday pre-market. Let's go back to SP500 weekly, see what would happen in the next week. This is the SPX weekly chart. I have said bears had a 50% chance this week. Bear indeed took the chance and closed lower. But I consider this weekly bar as a doji rather than a bearish bar. It is not only a doji, it is a doji, but not only a doji, but an inside doji. Officially, the market is indecisive. My personal bias is with bear, since the close has gradually moved to lower. Go to SP500 daily chart. Here is things getting interesting. Look at the chart. Both bulls and bears have their cases, respectively. Bulls may argue that the market has made first higher low and higher high, that's starting a new bullish trend. But bears may see we had finally break down this congestion area from the 2 weeks ago, more than 2 weeks ago, that is 4180 to 4200. And now we are in the market step down a little and form a wide consolidation area between 4060 to 4180. I don't know who will be the final winner, be honest. But I do know in this kind of wide consolidation, both bulls and bears make money, but pigs got slaughtered. Let's go down one more layer. On the 30-minute chart, SPX is on 1F down, and this 1F down is still ongoing. And anticipated Monday's low will be lower than Friday's low. Friday low here, 41.52. So Monday have a lower than this. After that, the 1F may end. Now upon the end of this 1F, there should be a second 1F up. This 1F up leg here may or may not make higher high. This before we really have revisiting 41.60 once more. So this is the route I can see, the most possible route. If you like my weekly report, please click the like button and subscribe to my channel. You all have a good weekend. Happy trading next week.